Welcome back to Unscripted, everyone. Carwash.com's video interview series connecting you with market leaders. Joining me today on Unscripted, I'm happy to have David Bellinger, an executive director and senior analyst covering the consumer growth and e-commerce verticals at MKM Partners. David, great to see you.
Hey, Rich, thanks for having me on.
Sure thing. Yeah, you and I, we actually connected a few weeks back, and you were nice enough to provide an introduction. So wanted to get you on the program today to discuss a little bit more and extend our conversation that we had, David, and talk about some of these shifting dynamics that are happening in the car wash industry, specifically on the operator side. So appreciate you doing this interview with me here. Why don't we first start by giving our audience a little bit of background? Can you explain a little bit more of your background and how and why your firm initially got interested in car washing?
Yeah, sure. So I'm a sell-side equity analyst. I follow the consumer sector, and that really includes a wide range of companies, whether it's Home Depot, Lowe's, Tractor Supply, Five Below. Also got auto parts names in there like O'Reilly and AutoZone, and some e-commerce operators like a Wayfair. But at my previous firm, I was involved in the Mr. Carwash IPO process, got to meet the team, fly out to a few markets and tour some of their locations, and essentially got to know their operating model pretty well, and eventually launched research coverage of their stock in July of last year. And subsequently, I moved over to MKM Partners, my current firm, and launched coverage of my own sector over the summer. More recently began following Mr. Carwash, ticker's MCW, again in early October. So following the story closely, again, excited to be back on it. I speak with a lot of investors on this name, a pretty good amount. Also get some intel from private companies in the sector, talk to private equity firms involved in this space, and just some of the ongoing sales trends and hot topics that tend to pop up quarter to quarter. And I'd say too that I really didn't know about the unit economics of this business. And I'd obviously been to a car wash before. I watched a lot of Breaking Bad, but didn't understand really how good of a business this could be, especially at scale. And the unit economics for a Mr. Car Wash are just very strong. They're talking about average unit volumes around $2 million per year. Four-wall EBITDA 40% or higher. They've got that membership piece, which is about 60% of revenues. Some of these locations have 10,000 plus members, and just given that, Mr. is booking over $1 million in subscription revenue per day. So that's all very appealing from an investment perspective, and I've been intrigued by the overall industry and mainly its growth potential ever since.
Yeah, and that growth potential has come to reality here these last few years. Seeing quite a bit of operators scale, and one of those you mentioned quite a bit in their first response there is Mr. Car Wash. And a lot of ways, David, Mr. Car Wash can be considered a trailblazer, specifically in the car wash operator segment. So I know you spent some time working with that team, as you just mentioned, and getting to know their business a little bit. So what can other operators and investors maybe learn from Mr. Car Wash's history and activity, especially over this past decade?
Yeah. So the main thing to me is the power of that membership model and just the significant growth runway ahead. And Mr., they continue to operate quite well for being one of these larger chains, right? With more of this national footprint, they're heavily in some of these key regions, right? And something interesting I looked at and learned from them is that market densification really matters when you start to build a big membership base here, and the brand identity in a certain MSA or trade area can drive a really high membership base. Where customers are washing their cars at more than one location. That's really important, having that high cross-pollination rate. And also, if we step back, one big takeaway that I've got from Mr. and talking to private companies is that it's very difficult being a public company and trying to grow at a very rapid pace. You're simultaneously trying to grow your earnings quarter in and quarter out. You've got a lot of eyes on you. So Mr. has seen these quarter to quarter fluctuations, right? And they can be from a wide range of things, weather, wage rate pressures, an inability to find good workers. You got chemical cost inflation. Mr's also got a high debt burden that's at a variable rate attached to it. So it's interesting to see all the puts and takes that pop up every 90 days or so in a given quarter. But one of the main things that they do well here, and private companies can learn from, is that you've got to stay the course and grow your new units organically. There's some selective M&A you can undertake, and really just grow through any economic environment, really, because the returns are there in the car wash space, and these units will ramp in due time. And that I think that's something operators can take away, is that some of these near-term headwinds, they'll fade eventually, but just the overall growth of the sector is still pretty massive. And if you stay that course, you should see these returns that are commensurate to that growth rate.
Well, it's certainly great to hear about the future of the market, especially as you mentioned, face some headwinds this year. But maybe let's talk about a little bit about those headwinds. Going into 2022, the industry chatter, or scuttlebutt, if you will, was that another car wash chain or two was going to look to go public. Just like Mr. Carwash did, I believe it was June of last year, late June of last year is when they made that announcement. So certainly unique in our market to have an independent car wash operator like that file for an IPO. So the chatter was that another one or possibly two chains was going to look to follow suit. Obviously, the year's not out yet. We're in late October as we sit here and record that. Or record this interview, but that didn't come to fruition this year. So why do you think that didn't happen, in your opinion?
Yeah, so I would say that's probably more of a capital markets issue than anything else. So you had a record number of companies going public in 2021. You had a lot of these frothy valuations, low interest rates. It was a really conducive environment for that. And just with the correction we've seen this year, just sitting here today, you've got the S&P 500 down about 20% year to date, and that appetite for IPOs has dried up pretty quickly. So we do see a few here and there, but the market really hasn't opened up in a significant way just yet. And I think what most of these companies are waiting for is just clarity on the macro environment, right? Or are we headed for a recession? Is it a soft landing? Is it more severe? When does inflation roll over? And what eventually happens to consumer spending? And that'll be especially interesting for a car wash sector where that payment, that service can be considered pretty discretionary. And we don't really have a great idea of what churn could look like. So there's a lot of unanswered questions in terms of membership, in terms of retail, but I'd say that the broader car wash environment has been a little choppy this year, and you couple that with just the capital market situation. I think that's why we haven't seen any others come public to date. But it's still very possible. I mean, if we look out a few years down the road, we could have a handful of publicly traded car wash companies at some point. And I think it would be interesting to see what their numbers are on a head-to-head basis with the Mr. Look at their unit economics, and do they have the same level of profitability? So it'll be interesting at some point, but still to be determined right now.
All right, sounds like something to revisit either in 2023 or the years ahead for sure. So we'll keep following that movement. So David, we're going on our fourth year. Dating back to all the COVID challenges that we faced. We're going on our fourth year now of economic and global uncertainty on a few levels. And you mentioned a couple, but in your opinion, how has the car wash market fared during this period? And will we see a consistent upturn in the stock market and a return of investor confidence soon, do you think?
Yes, that's the big question, right? So, I mean, relative to other parts of consumer spending, it seems as though the car wash business has held up okay in past recessions, right? And I think it'll be different across the different kinds of formats, right? So you've got some of these more premium washes, right, more expensive hand washes or detailing, that likely gets impacted somewhat more severely. But when you contrast that with sort of this up and coming express exterior model, it's relatively less a less expensive service. There's that easy use. You've got a pretty sticky customer base. So that type of business might not be as impacted as some people might expect. And also on the membership piece too, you got to remember this, that a lot of these members that like a Mr. Carwash has and these other concepts, that was incredibly small back in the 08, 09 period. These things are just getting started. So we don't have a good playbook or guidepost in terms of what expectations for member churn would be in some kind of downturn. But these member bases are huge today. They're significantly higher. Mr's almost at 2 million today. So more to come on that. But as I think about this more and more and continue to study this model, it seems to me that the customer using that membership, 3, 4, 5, 6 times a month or more, that's become really ingrained in the customer routine, right? Especially in markets where driving is a very prevalent piece of your life, right? The weather is cooperative. I'm talking places like Florida, Austin, Texas, Salt Lake City, San Diego. So there's a big membership base in those regions. And those customers might opt to keep that $20, $30 a month service as, call it an affordable luxury, right? So the member churn might not be so bad. And I haven't certainly heard anything of a material step up in churn in this environment just yet. And Mr. hasn't talked about that really either. So it'll be interesting to see, but maybe these numbers hold up a bit better than some investors are expecting.
Yeah, for sure. Be interesting to see. But do you have any early predictions to leave us with for 2023, David?
Yeah. So yeah, I think we will see more investor interest in these names once we get clarity on the state of the consumer and basically where we're heading in terms of economic activity. And I'd also say too, one hot topic in the car wash space has been this M&A environment. It got very heated throughout 2021. I think it's still going to be pretty brisk, right, as we move into next year. You might see some of these deal prices and acquisition multiples start to cool off, right? They're coming off really elevated levels. You got interest rates moving up, and I sense there was a bit of this sense of euphoria through the last couple of years, and that's beginning to ease now in the later part of 2022. But it seems like there are still some very committed buyers in this sector, right? You've got a lot of capital at play. You've got private equity players out there. You've got these platform car wash companies, and they're continuing to bolt on 1 and 2 store chains, or maybe there's even some larger deals that pop up like a 20 or 30 store chain. And saw Mr. do that with a Clean Streak in Florida. And then also too, I think this could be an interesting development, but I think we're going to see some of these more sophisticated car wash operators. I think we're going to see a significant step up in terms of data usage and basically tapping into that rich set of information all these guys have at their fingertips. So, maybe we can slice some of that data by cohort. You could push a price increase to a certain subset of members if you want. Maybe those higher frequency users where you have pricing power, you could raise your price for a membership $1, $2, or $3. You could also look at members who are basically on a similar curve of other members in the past that have canceled their membership at some point, right? So if you follow that same curve, maybe you can get ahead of it. Maybe you can hit a member with a targeted ad or a promo, trade them up for something like a one-time premium wash, and maybe that prevents some churn or at least pushes it out a month or two. And there's some real incremental profit to be made if you can pull that off, right? And if you can keep your members around just a little bit longer, there's a really nice profit unlock to be had there. And it's just as painful on the way down as it is on the way up too, right? So both ways here, but I think we're going to start to see a lot more data usage, and that's really with an eye towards retention and keeping members in the system longer. And I think everyone's really just scratching the surface on that front, and it'll be an interesting development, not just 2023, but maybe in the few years after that as well.
Yeah, the more you know, the more you're better able to serve your customers and maximize your profits. So certainly makes sense. David, personally, just for me and Professional Car Washing and Detailing Magazine, we're kind of winding down our research into our top 50 list of U.S. conveyor car washes, which simply just tracks the number of locations of a lot of these big companies and chains. And I could tell you, as we're winding down the research here in late October, I've been, updating this list and helping to update this list for the past 10 years, and I've never seen as many changes. So I think a lot of folks out there who follow the list are in for some big surprises on our list this year. So we're excited to release that in these next couple of weeks. I thank you for taking some time to do this interview and discuss some of these market trends with me today, David. And it was great to see you.
Great. Thanks so much.